Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz. Well, uncertainty over the Middle East conflict, rising oil prices and caution ahead of major central bank decisions this week has weighed on sentiment, with European shares near three-week lows. Wall Street's run of record closing highs has ended with renewed concerns over the AI boom, which weighed on tech stocks days before five of the sector's most high-profile companies are due to post quarterly results. Semiconductor shares, which have surged more than 40% so far this year, weighed on the Nasdaq, which suffered its biggest daily percentage loss in a month. Well, shares of Oracle, as reliance on OpenAI for its cloud computing ambitions has been under scrutiny, that fell 4%. All eyes will be on Alphabet, Amazon, Meta and Microsoft tonight as they report earnings, followed by Apple the following day. General Motors advanced after the carmaker beat quarterly profit estimates and lifted its full-year earnings forecast, boosted by a resilient US car market and expected tariff refunds. UPS shares dropped 4% after the package delivery company reiterated its full-year revenue target as spiking fuel costs offset underlying business improvement. Coke rose after better than expected quarterly report, with it raising its annual earnings target, while Starbucks beat estimates for quarterly comparable sales. And Visa beat profit estimates as the world's largest payment processor benefited from a steady rise in payment volume, sending its shares up around 4% in extended trade. Well, US-Iran peace negotiations remain stalled, with President Trump unhappy with the latest proposal from Tehran, which would set aside discussion of its nuclear program until the conflict was concluded and passage through the Strait of Hormuz resolved. Posting on social media, President Trump said Iran has just informed us that they are in a state of collapse. They want us to open the Strait of Hormuz as soon as possible as they try to figure out their leadership, which I believe they will be able to do. Well, meanwhile, the United Arab Emirates, one of OPEC's largest producers, is quitting the oil exporting group, weakening its control over global oil supplies and further widening a rift between the UAE and Saudi Arabia, the dominant member of OPEC. The move is expected to allow the UAE to increase output once exports via the Gulf resume, as it would no longer be governed by OPEC quotas. Well, US Treasury yields rose with higher oil prices as mounting doubts over a near-term resolution to the war in the Middle East. The yield on the 10-year note rose to 4.36%, the 2-year was up to 3.85%. The Australian 3-year government bond yields rose to 4.8%, the 10-year higher at 5.1%. The US dollar index is up slightly on the day, the Aussie dollar trading at 71.9 US cents. Well, oil prices rose as investors assessed the stalemate in the Iran conflict and news that the UAE is cutting ties with OPEC. Oil prices briefly paired gains on that news, but Brent was last hovering near a 3-week high, while West Texas Intermediate broke through the $100 barrel mark for the first time since mid-April. Brent crude rising 3% to close to $111 a barrel. Gold has fallen to a near 4-week low on persistent inflation concerns. Spot gold down around 2%, close to $4,590 an ounce. Copper fell almost 2%. Iron ore down to 109 US a ton. And Bitcoin is trading at around 76,000 US dollars. Well, US earnings season has delivered a mixed picture with performance diverging across sectors, markets remaining volatile against that backdrop of ongoing geopolitical tensions. Let's get across those moves. Anu Ganti joining us from S&P Dow Jones Indices. Anu, welcome back. Good to have you on the show again. So we are in the midst of earnings season, a very big week this week too, in regards to some of those mega cap tech stocks that are due to report. Overall, how would you assess performance?
Yeah, so it's certainly been a positive few weeks, right? We've had gains 4 weeks in a row. We've had a tougher day today, as you mentioned earlier, when looking at performance. This is going to be a critical week as we look to earnings from the Mag 7, from the mega caps. So definitely uncertainty is on the horizon. So we're looking closely ahead to big cap earnings. The other factor that we're looking ahead to, of course, is the Fed and the impending rate decision tomorrow. And market expectations are for rates to remain unchanged. So we shall see. But of course, the big concern concern bubbling under the hood is inflation. Inflation concerns with rising oil prices, concerns within the energy sector. So really two big unknowns right now in the market with mega cap earnings impending, the Fed rate decision impending. It's been a positive few weeks so far with a bunch of different all-time highs and records for the S&P 500. But the question is whether this momentum, of course, will continue.
Well, and many of those gains there driven by tech stocks in particular. Overall, though, Anna, how would you compare sector performance?
Yeah, so it's an excellent question, Andrew, and particularly we're seeing that rising dispersion in the market, which is very typical of an earnings season. And I remember the last time we spoke, we were talking about the return of macro volatility as the war started and geopolitical concerns bubbled up again. So it's really been a reversal in volatility in the market with initially AI-related concerns, concerns about the software sector, greater micro concerns. Then micro took a backseat to macro, and then we saw higher correlations. Now, as we currently speak, we've seen that reversal again with declining correlations in the market and rising dispersion. And looking at the chart you have there, if you look at the U.S. Versus Pan-Asia, just a significant driver of outperformance over the long term has been stock selection within sectors, primarily within consumer discretionary and communication services. These are, of course, the sectors that have housed some of the big tech names that have outperformed in recent years. So sectors are especially important to think about right now in the geopolitical climate. Also, if you think back to last April with tariff-related uncertainty, understanding the different geographic revenue exposures of sectors is key. So a really valuable tool in this uncertain climate right now.
Now, I know we might just go back to those charts, the first one we had there, just to make that comparison you mentioned there with the S&P 500 in terms of the, excuse me, S&P Pan-Asia index. So what are you seeing at the moment, given what we've seen historically and perhaps those performance now?
Yes, and no, it's an important question, and over the long term, we've seen that the U.S. The S&P 500 has outperformed the S&P Pan Asia BMI, and if you take a sectoral perspective, you see that a big driver, and you're looking at that outperformance of the long term. In recent times, of course, the U.S. has underperformed relative to international markets and to Asian markets, but important to keep that long-term horizon in mind. Also, from an APAC perspective, U.S. exposure historically has helped to alleviate some of those home biases, and important to understand the differing sector weights within the S&P 500 versus S&P Pan Asia. Of course, if you look at the S&P 500, the biggest sector is information technology. If you look at S&P Pan Asia, the biggest sectors are industrials and financials. So important differences here to understand, and sectors can be used as a complement, as a tool to achieving these exposures.
All right, and in fact, I think we've got another chart there just highlighting the outperformance, particularly led by communication services and consumer discretionary.
That's exactly right, Andrew. And the third chart you have right here looks at the individual sectors, and we saw that most of the S&P 500 sectors outperformed S&P Pan Asia sectors over the long term. And what was interesting to me is most of the S&P 500 sectors outperformed the S&P Pan Asia overall. So definitely an important time, especially if we look at history, to think about the differing sources of outperformance across geographies, the differing revenue exposures, and understanding it from a sector perspective is important. And of course, we have the select sectors which are in the S&P 500 and which have capping in the methodology to achieve these views.
So, Anu, there's a lot of debate here, given what we're seeing with the performance of our own underlying index and how it has underperformed, particularly relative to Wall Street and the S&P 500. Does, in this view, in your view, come down to the fact that the S&P 500 very much dominated by those mega cap tech stocks, the performance of tech overall, whereas our tech sector is very small by comparison.
Right, and that's an important point to understand is the differing sector weights across geographies. Whether you look at Pan Asia overall or you look at Australia, having that lower information technology weight versus the S&P 500. I would also say it's important to look at the next level of industries, particularly semiconductors versus software. We've seen that greater divergence in the U.S. So important to also look at sectors and industries across the U.S. versus Pan Asia versus Australia, for example. And final point is that the sector weights change over time as the market continues to evolve. So of course, we've seen S&P 500 information technology continue to outperform so far. As a result, the weight has grown. Of course, we'll be watching this week to see if that continues.
Indeed, we will. Anu, great to get across what you're seeing there. Thanks for joining us on S&P Dow Jones Indices.
Thank you.
Well, let's turn our attention to the local market then ahead of the open here on this Wednesday. As you can see, looking for another negative start, setting a pattern this week, down around 0.4% of the S&P ASX 200 futures. Big day ahead of us, a number of quarterlies to get across, including the likes of Woodside. Plus, of course, we do have the quarterly read on inflation, that CPI number due to drop at 11:30 Eastern time. That will set the tone, certainly ahead of the RBA meeting next week. Stay with us for the open.